This is why I like to trade spreads, guys. It's just a better trade. I'm telling you, you get more back and forth that protects you from trading outrights. How I would normally trade these is when we see that line in the sand earlier, talking to Diego about buying NASDAQ, instead buy S&P, but as it rallies, that's when you, instead of getting out of your S&P, that's when you want to sell NASDAQ. And what you're doing is you're legging yourself into a really, really awesome level. So down here, if you buy S&P, if you're bullish, S&P's rally, instead of taking profit on the S&P, roll into a spread because this is still really inexpensive relative to where it historically trades, and therefore you can leg into a much, much, much better level. Yeah, then it's a good play. All these spreads are, look at, and I use this as more of like, same thing down here. If you buy S&Ps and it goes against you, don't get out of your S&P, sell NAS. So it gives you a little bit more of so like right here, if we think the S&P and NAS are going to rally, and let's say we think it's going to go up here, if you buy one S&P, if it's working for you, you can do nothing and just let it work, or you can sell a NASDAQ, legs you into a great spread level. What you can also do is if you buy S&P and it goes against you, well, then you're just legging into a bad spread level, which might be up here, but you could still break even on the trade. So let me repeat that just so you understand. Even if you buy S&P and it goes against you, don't stop yourself out. Consider selling NASDAQ. You're legging yourself into not a great spread level, but you could definitely still scratch that trade. You're keeping yourself in the game. And that's when you can use, if it's up here, you could sell the Russell. Down here, you probably want to sell a NASDAQ. Down here, maybe you want to sell the Dow. And then you start looking, do I want to sell the NASDAQ or the Dow? Well, up here, you might want to sell the NASDAQ. And so you're just making everything that you do more efficient. And that's really why we use those, have the different spreads up. Not necessarily that you have to trade all these different relationships, but back to this example, if you buy the S&P and you're looking to sell something against it, that's when you start looking at the other charts to see where can I get, what's out of line, what's expensive. Absolutely not, Gary. Absolutely. So Gary's question, great one, is you don't always buy and sell the pair all at once. I want the most amount of flexibility that I can have. So what Diego did this morning is exactly how I use this stuff. We had our line in the sand. This morning, we got down to our line in the sand. The only difference is he bought the NASDAQ. I would have bought the S&P, because if you look at it this way, Diego, if you bought the S&P exactly where you got out of your NASDAQ, instead of getting out of your NASDAQ, if you did the same trade and sold the NASDAQ, now you're long one S&P, short one NASDAQ. You're up the same amount on the trade as you are right now, but you also have potential to make a whole bunch more. You also, if it goes against you, the level that you would break even at your overall trade, I would double up or triple up or quadruple up, because now you're legging into a phenomenal, phenomenal level and you can get a good deal more size on it. You might need to listen back to that, but that's how I would use these spreads. Okay, Gary, does that make sense?